In this video, we're going to work exercise 14-3A. The budget is given. We've got to complete current cash sales and collections from accounts receivable. The company had $50,000 in accounts receivable on July 1st. That's the beginning amount. Heather's Florist normally collects 100% of accounts receivable in the month following sale. All right, so there's a little bit going on here, but we'll break it down into pieces. So current cash sales, let's look at that we need to calculate. The sales budget, there's going to be a cash sales, and then there's going to be sales on account. So not everybody pays cash. Some are paying, let's say this is a business. So businesses are maybe have an account with the florist, and they'll pay their account within 30 days. Or maybe these are just credit card payable, right? And then Visa or MasterCard will send the money to the florist in a few days. So I don't know what the story is, but either way, they're not collecting cash right away. They're not paying cash, check, debit card, where the cash is transferred quickly. And I say debit card. I mean, it could be like a credit card situation. That one I don't know. I came from mortgage lending. I probably need to look that one up. But check or paying cash literally, let's just go with that then as an example. So sales on account versus cash. Well, as far as scheduled cash receipts, when do you get the cash, right? So I think when just saying that helps the answer the question on these. So current cash sales for July, August, and September are quite easily done then when you look at it that way. Just bring the cash sales down and show those as cash collections. Now, please do not plug this number in. Let's calculate it correctly. All right, so the ending, I know this says July 1st, but June 30th, if I said, given this, the company had $50,000 in accounts receivable on July 1st, and then I turn around and said, what is the dollar amount on June 30th of this company's accounts receivable? It's the same number. It's 50,000. So we end the month, 50,000. We begin the month with 50,000. Very common in accounting. So that means they're going to collect June accounts receivable, which was given right here. It was just not worded that way. $50,000. Now, they collect everything else in the month after. Get rid of that arrow because I'm fixing to draw another arrow. Literally, you're going to bring in the July sales on account to August because they're going to collect 100% of those. They said normally they collect 100% in the month following. And then when you add up, that's 99, 87.5, and 90,000. Okay? So B, we're done with A. B says determine again, let me go back. Please do not make that a plug. Make sure you can calculate either one of these independent of each other. It's just a cushion. They didn't even need to give you the total. They could have just left it blank and you had to calculate it, okay? All right, so B, determine the amount of accounts receivable the company will report on its third quarter. All right, so let me go over common things that people will do. They'll take, and I was included in this. I can tell you, I don't know how many times I had to, kept making that same mistake over when I was learning. Do not add those. Do not. Okay? This is a snapshot of the last day of the quarter. So on the last day of the quarter is September 30th, right? So what amount of accounts receivable is there at the end of September? There is only one thing when you look at it that way. So you're not looking at the entire quarter. You're only looking at the last day of the month of the third quarter. And that is the answer, $64,800. When you look at it from that perspective, that lens allows you to focus on the correct answer. It's not a total. That's the income statement. What happened during the accounting period? A balance sheet type question, which is what is the balance of accounts receivable? That is a snapshot. That's like pulling out your cell phone, taking a snapshot and saying, okay, that's what it is. The 11:59 p.m. last day of the month. And that would be $64,800. Okay. Well, this concludes the video on exercise 14-3A. Need any help or assistance, please email me.